Good Sunday evening, everybody. Luke Gromen with FFTT, Forest for the Trees. Glad to have you here for another Sunday night. Two things that grabbed me recently, or grabbed my attention recently. I'm going to jump right in. First thing is a chart I retweeted from a man named Kip Harridge on my Twitter feed. I'm going to hold up a chart here, but it shows the emerging market ETF or EEM divided by the S&P 500 or SPX, and it's not going to come through great here, but what you can see is, you probably can't see anything. There you go. You can see the bottoming in the relative performance of the EEM relative to the S&P 500 actually began right around the beginning of October when this sell-off began. In U.S. equities. I don't want to make too much of it, but it's a very big non-sequitur to a number of different themes, particularly at a time where it appears the U.S. economy is weakening pretty markedly. And so it's something I'll be watching going forward. And like I said, for a bet, I apologize for the poor chart here, but you can see the retweeted chart on my Twitter feed from today. It ties into the second thing that really grabbed me recently, which is to say that it appears like we are getting into the rising U.S. deficits into a foreign treasury buying strike is now crowding out U.S. equity and housing markets portion of this movie or show. And this was sort of everybody kind of laughed at the emerging markets as they were getting crowded out first, as they typically do. No one's laughing anymore, and so it really is a case of, as we tweeted, check to you, Fed. What do you want to do? And I thought it was even more interesting in light of a comment I saw today, noting that Goldman, there was a report of Goldman's saying what their clients' top three concerns were, and none of those were increasing U.S. fiscal strains, which I thought was sort of interesting because to me, indirectly, that is by far and away the number one issue. The bottom line is that as long as FX hedged Treasury yields remain negative, then there's going to be this accelerating crowding out of the U.S. and global economy, and it is not going to be good for risk. So we continue to think the Fed is going to be forced to act much sooner than people think. Perhaps the dollar and gold are starting to reflect this, but we will see. I think it'll be a real interesting week this week. So with that, I will open it up for questions. While I'm waiting for questions in the queue, I would highlight, take a look at the Investors Podcast. We recorded a session with them about 10 days ago. It hit last week, gotten very good feedback on it. I suspect that a link to that is up on our site, but if not, you can go to the Investors Podcast and had a really nice conversation with those guys. And as always, other things that we're up to, FFTT-LLC.com, and you can check out where we're going to be and different types of products we have. So right now, I'll open up for question. Hi, Eric Carlos. How are you? Good to see you, bud. Thanks for checking in on Sunday night. It was a successful day today for my Browns. Baker Mayfield is the real deal. It's been a while since we've had a real quarterback, so it's enjoying. So let's see. I'm enjoying the back and forth on Twitter with you and Livemon. Always entertaining and insightful. Absolutely. Yeah, I really like that guy. We go back and forth at each other pretty hard at times, but I think it's maybe it goes back to my football days, but you only get better by really going hard in interacting, and it goes the same, I think, with intellectual pursuits. ES and RTY gapping down. At what point loss tomorrow will forced selling accelerate? Hi, Jonathan. This kind of ties into something we've been talking about with this negative hedge FX Treasury yields. The U.S. is now being crowded out at an accelerating pace. you know, I don't know what magic point number would be where you get forced selling accelerate. And obviously, I think it's a very, very important point to raise from the standpoint that, you know, you've seen a couple people talking about that, you know, the machines are 80% of volume, and the machines don't have, a lot of them are trend following. So it could get interesting pretty quickly. I don't know what the right point number is. How does Europe look going into recession with interest rates? Hi, Sasha. How are you? You know, it's interesting to me. One thing I was just, you know, as I was kind of looking at some things to get ready for this, you know, Paris is on fire and the dollar's down. And obviously one of, if not the biggest cross against the dollar is the euro. And so that's a little, if you'd have said to me, and obviously I'm pretty known as, you know, structural dollar bear, but if after, you know, given this weekend's events in Paris, if you'd have said, hey, how's the dollar open, I would have said up. So we'll see. I don't want to make, you know, 5-minute macro, you know, too much of it, but it is something that's catching my attention. To answer your question directly, Sasha, because I know I really didn't, you know, I think Europe, the U.S., and China, to a lesser extent Japan, but I would say those big three, they're all in sort of, you know, to paraphrase or to take Michael Lewis's metaphor from The Big Short, there are three guys in a boat and they're fighting to the death, and they're all tied to the waist to each other at rope, but with rope. And so as soon as one guy gets killed, the other two will throw his body over and find themselves being dragged to the bottom. So it's to me, the thing that has me most interested with everything that's going on is you're going to need, you know, for real change, for real resets, for real restructurings, you need a catalyst, you need a crisis, historically, and boy, it sure looks like we're moving headlong into one on a number of fronts. Mayfield goat. I wouldn't go there yet. I hope so, but it's been the greatest ever for the goat for the Browns since '99. That's for sure. You're welcome, Eric. I appreciate you checking in. Hi, Remy. Let's see. U.S. Canadian dollar view, please. That's a great question in light of this weekend's events. I would say two things. I guess I would probably expect the dollar to strengthen versus the Canadian dollar. I think they're showing their hand that they're working with us, but it'll be real interesting to see how they react to, they being the Canadians, how they react to the pressure from China, and how this whole situation works out. And the reason I say that is, if you know, with the news with this Huawei executive, and full disclaimer, I have not read all the allegations. I don't know anything more than what you can see in the mainstream press. I just know that intuitively, if I was an international, a non-U.S. billionaire and or high-level corporate executive, particularly of Chinese descent, but probably others as well, that the Huawei arrest would have really turned my head. And by that I mean, you know, if I was Chinese, I'd probably say, all right, the condo in New York City, dump it. You know, the condo in LA, dump it. Move the money somewhere else. And so, to me, or maybe not dumping it right away, but I'd be starting to think about it for sure. Again, it's a big non-sequitur, and it might need to be, it might need to happen, but it's a big non-sequitur to, in a crisis, the money will all flow to the U.S. Because, you know, the rule of law is there. I'm not saying they're not abiding by the law. I'm simply saying that, you know, politics are factoring in, and maybe it's simply a fact that we're enforcing the law, and that's fine. We should enforce the law if laws are broken. I'm simply saying that if we go from not enforcing laws to enforcing laws, if that's the case, that too is a potentially meaningful change. So, like I said, to me it gets my eye open. So, sorry to sort of be long-winded, Remy. I think it's a really good question, but hopefully that gives some thought process. Let's see. Will the Fed raise rates in December or push off? Is the decision based on the market of the next week? I think it might be. You give me another, you know, 2 to 3 to 4, down 600 days on the Dow. And particularly if the Dow, I think that will open eyes, particularly if the macro data aren't cooperating, and clearly they seem to be on balance to be not cooperating. Let's see. Hi, Supporta. What is a way for a novice investor to protect themselves? How can a novice position in commodities? I had a really interesting lunch with a veteran, experienced private investor, the type of person who's a private investor because they can manage their own money and live the life they want to live, where they want to live it. Very fascinating person. And we were talking about this back in August, and so this is not a question, you shouldn't feel the least bit bad about trying to figure out the best way to position, because it's something people with lots of experience, not novices, are trying to figure out. And it's not an easy answer. And it's not an easy answer because, quite frankly, the situation we've been in, there are elements of it that history is repeating, but it's on a long cycle basis. So the last time we had a global sovereign debt bubble starting to burst, which is what I think is happening, it was 80 or 90 years ago. There's really nobody alive that lived through that. So you can read the history books, etc. But even then, the derivatives markets were not the way they are. You didn't have nuclear weapons. You didn't have the technology. Information wasn't at your fingertips. Technology wasn't what it was, so the world didn't move as fast in terms of having to react. So I lay all that out by way of sort of preamble to say that to me, I think the best way to be thinking about is trying to get as much capital from one side to the other. And as that stands, it's the end path seems fairly clear, but the path there, the end point seems fairly clear, but the path there can take a number of different twists and turns. And so for me, particularly if you're a novice investor, I think you want some cash to stay liquid. I think you want some bonds, but I would rather have high-grade corporate bonds than sovereigns. I would want to have a blend of equities, but probably at this point in the cycle shaded more towards emerging markets. We continue to favor them for the long term, but I think those types of names. And then I think you have an overweight in gold, physically owned, preferably out of the system. And you make adjustments based on what happens and as data changes. Doug Green, anything really surprising to you? Hi, Doug. One of the things that surprised me, and I talked about this week in an interaction with Brent Johnson, was I would have thought, the number of things surprised me. Number one, I would have thought that that the U.S. economy would have been in better shape than to begin really getting hit with a 3.25% 10-year yield. That is quite surprising. I thought you could have gotten a 3.5 or 3.75 before things started to break. It's not a good sign, and it speaks to Ray Dalio's point. Hey, we have 24 months until the U.S. has a fiscal crisis where the dollar gets marked down tremendously because the Fed's going to have to monetize the deficit. And that's basically his call from September. He reiterated that at the end of November. I thought all along he was being aggressive, or he was too conservative with 24 months. Which makes sense. I wouldn't want to chase this dragon if I was in his shoes, per se. But what is happening suggests that a U.S. fiscal problem, perhaps a problem in China, etc. All these things, they're going to come to a head faster than anybody thought. And so when you hear people say, well, the U.S. or Europe or China will be fine, they can make it 5 more years. To me, the real big catalyst is the U.S. fiscal situation. And I think that, we don't have 5 years. I don't think we have 2 years. And so that to me has been, one, that 3.25% was too high on the 10-year before things really started rolling. And number two, how quickly, how bad it's gotten in markets as quickly as it has. Hi, Gary. Significance of EU and India paying for energy in their own currencies, dollar bullish. Mechanically, anything that reduces dollar circulation in the presence of dollar-denominated debt, all else equal, is short-term dollar bullish, long-term dollar bearish. I thought the timing of the EU saying this was quite interesting, given that it came after the G20. And a G20, I think we talked about last week, where you had MBS and Putin high-fiving like a couple of frat boys, and you had Xi and MBS smiling, in a manner which observers say they rarely see Xi smile. So these guys understand signaling. They know how to manage themselves publicly if they don't want certain messages sent or other messages sent. So to me, I think ultimately, EU and India paying for their energy and their own currencies continues to be more sort of bricks in the wall, if you will, of moves away from the dollar, which in the short run creates more of a dollar squeeze, but which of those bricks are is ultimately the sort of the straw that breaks the camel's back, if you will, to mix my metaphors in terms of it going from being dollar positive to being dollar negative, because we're over 5 years into this the de-dollarization of commodity trend. Let's see, what? Not J.C. Penney bonds. No J.C. Penney bonds. Let me see. Less than 12 months. Even the Simpsons predicted it. That's funny, Herc. Okay. Well, looks like we're wrapping up here. I don't see any other questions unless I can't toggle down. I think that's the. I think that'll be it for tonight. So hey, everyone, thanks for jumping on. I appreciate you guys joining me as always. It's I get just as much out of it as hopefully you guys do. So I appreciate you joining me. And one more question. All right, I'll take it. Let's see. Hi, Sasha. Are we setting up for another European banking crisis? Possibly. Over the weekend, Harold Malmgren, who I respect immensely, had a comment about potentially marrying Commerzbank and Deutsche Bank, or as a way of delaying that. I thought the comment coming from him in particular was very, very interesting. I keep coming back to the same thing, though. If we have a European banking crisis, let's pretend something happens with Deutsche. Excuse me. Oh, throat's all dry. Let's pretend something happens to Deutsche. To me, you're looking at hours, days, hours, or days or hours until that goes around the world. And if something happens here with a GE or something, same thing. Deutsche is going to be in trouble within days or hours. Something happens to China. Excuse me. Same thing. And so it ties into that. Really, the fiscal situation of the U.S. and the Western sovereigns in general are all based on nothing going wrong for the next 10 years anywhere. And so to the extent anything goes wrong anywhere, a lot of those fiscal things, which are problematic under those very optimistic assumptions, get pulled forward very fast. Hi, Maslos. Will miners outperform bullion? I don't know. I can make a case, yes. I can make a case that bullion will outperform, because if gold is moving back into the system in the manner which it appears to be, given central bank actions, then gold starts to become a reserve asset, and as a result, the sovereign states will want to have control over that. And so, to me, it's possible miners will move up significantly, but have to sort of give the last X dollars of profit to the state. That's always a risk in those types of situations. I advise people to do their own homework on that. Let's see, why the divergence in statements from MBS from the Trump administration versus CIA and senators. I know, dude. I don't even have any water around me. Next time I'll have to do that. I'm sort of rapid fire here. The why the divergence? I don't know. I don't know. To me, obviously, Saudi is very important as part of the long-term relationship with the U.S. And so when the tone of that relationship changes, I think it's noteworthy. But to your point, how that relationship is or is not changing depends on who you talk to on what side of Washington. And that may contain informational value in and of itself, but I just don't have a great sense for why. Yeah, I agree. It's possible you could see some sort of windfall taxes, or on bullion as well. That is definitely possible. I think it's unlikely, but it's possible. So, yeah, that's right. That's right. All right, guys. Well, hey, I am going to jump here. I'm going to go get myself some water. Again, thank you everybody for joining me tonight. Like I said, I really do enjoy talking to you guys Sunday nights, and I look forward to catching up again next Sunday night. And go Brownies! Take care, everybody. Have a good night.